This is the MTPredictor weekly update, and let's take a look. This is our Australian dollar Japanese yen pair, and we talked about how this tends to lead the S&P 500 and is, probably about a 75% correlation between these two markets. And we had our DP back here. You can see that was a nice trade to the short side. Now we had this TS3 that we went over to the short side, and they came down here before the target, which is about almost 5.5 to 1 risk reward there. If we project our DP off this little swing B low here, you see we came right into the decision point support ahead of the target here. So we've come up to this is the 50-day moving average here. Come up to the 50-day, we've made this little market structure high here, and that's gone short again. And we'll see now if they make a second attempt at this decision point support area. If so, and they can clear that, we should see that target to the downside. And let's go to the daily chart here. Okay, here are the daily charts. At the top we've got the daily YM on the left, the weekly YM on the right. Here's your NQ on the bottom right, and the ES is here on the bottom left. And you can see the ES, we looked at these short trades before. Those have already hit their targets. You see, just as the Australian dollar yen pair, same setup there. Come into the 50-day resistance. You got the 200-day just above that, and that's looks like it's peaking here, has rolled over, and we'll see if that Australian dollar Japanese yen pair comes down and tests its DP. Then we're going to see the S&P maybe perhaps look at this second target down here. The NQ, you can see same, just about the same setup. And the NQ, again, that one has already hit the target. It's come up to its 50-day and its 200-day. This is the only market here of the four that we're looking at, or the three, I'm sorry, that we're looking at here, the YM, the ES, and the NQ, where the 50-day moving average has not crossed below the 200-day yet on the daily chart. So you see that sold off pretty hard on Friday. And then up here on the YM, the weekly DP, you can see that played out right down to the target. That's where we found the support. And the weekly, I showed you that last week, and where we get the bounce back up to the 50-day, the weekly 50 period, and haven't been able to close above the weekly 50 period. And if you look, that coincides with the daily 200-day moving average here, this purple line in our daily chart. Market has not been able to make that a little bigger. Has not been able to close above that area, and we got the rejection on Friday, closing below the 50-day now, down to the red line here is the 20-day moving average, and we can look at our put a decision point projection here. Comes out down here. If we're looking if this thing sells off again, and they can't break back above the 200-day moving average, we'll see. And this decision point, let's just take a look, comes in right about about 9,400. So if we'll see if they get a bounce here on the 20-day this week. We've got earnings season that we're is headed to full steam in our earnings season here. A lot of big numbers to come out in the next couple of weeks. So if they can bounce here, get back above the 50-day, and we'll see if they can test the 200-day again. If they can base above the 200-day, then chances are we're going higher off of that. And we can probably pick a decision point off a prior swing high there, and give us a target up there around that 10,650 area, 60. And then the downside target, obviously, if they can't take the 200-day moving average out to the upside, and then they roll over, as they've begun to here. If they don't find support and continue down, again, we'll be looking down in this 9400 area on the dailies there. Let's take a look at our gold trade here. We had the DP in gold. That DP also being, I can do our advanced chart analysis here and see what, if any Elliott wave pattern was there. And we looked and we saw previously we had this 5-wave pattern, wave 5 up ending here with the DP. And so much better probabilities. In fact, we had a red high volume spike here telling us that also that buyers may be getting trapped in here, those that were taking the breakout trade off of this prior market structure high or swing high here. And so made for a good trade to the short side there. It's in a risk-free trade at this point. You see the target down here around 1153 in gold. And we'll see if they can take out this prior low here. That's the gold market. And finally, let's revisit our YM trade on Friday. The ES also had a very nice trade. That was 5 or 6 to 1. And this one set up in the YM, a TS3. The difficulty on this trade was not that the the 3-minute trend was clearly short. Obviously, we had the big sell-off, the gap down at the open, and then the sell-off from there, which is a good healthy sell-off right there. And then you've got a little ABC correction here, a little bit of a bounce. But typically after a big drop like this and a big move down, you get consolidation. And it's tough to take a re-short at this point, especially this hadn't even come back up, even retrace, half of this down move here. It was a kind of a weak push up, but maybe that also led to the fact that the bounce here was not very much, was not very strong, which told you that the market was really weak. But things just kind of meandered the rest of the day, and of course we had the TS3 short set up here with 8 contracts risking $360. The other thing that was appealing why you really had to take this trade was the fact that it was almost 11 to 1 risk reward. And of course this was all set up ahead of time. Took quite a while, most of the day to get down to the target. But it certainly did reach the target for a profit of $3,940 before your commissions and expenses and so forth. But those are the, that's why you want to keep the losses small, because these trades do come. Not as often as the 2 to 1s and the 3 to 1s, but these do come, and you want to be in these trades when they do come. So anyway, I hope that's helpful, and we'll take a look at the markets again next week and see where we're at.